Well, so I want to talk to you about, fixing, debt, right? Because right now, everything that you guys are doing is fixed rate debt.
Yeah.
Everything I'm recommending people do is fixed rate debt. And I know it can get enticing because, adjustable rate debt can be lower, but that's not, and people assume that rates are going down, so they don't see the downside of it. But that still is a risky assumption to take.
Like they offer you better rates on the floaters, and so what you're giving up to me, the insurance policy of knowing what your interest rate is going to be and what your payment is going to be is trumps everything for me, because that is a controllable. We're going back to controllables, which is kind of how we started, and interest rates are controllable if you fix them. And of course, the cash flow is controllable on how you manage a property. And by the way, if we have high inflation, rates could go up. So, for me, I'm hedging the up, and I'm refinancing the down. So Ross and I did this already 20 years ago. Everything was fixed. And as rates went to zero, we're like, holy moly, like this is so great. We just kept refinancing on the way down. And so our payment was actually we were taking money out of the properties. Our interest rates were going down, and our payments were going down, and our cash flow was going up. It was awesome. So if you can make sense today, it'll really make sense tomorrow, especially if rates go down. And then you'll look like a genius if they go up. They want the money, and the issue is, if you really slice this up, the issue is that she's walking away from a loan that's actually below inflation.
Yep.
And that's actually a huge thing. Inflation is going up faster than she's borrowing. And so yes, so what do you really get by taking that money and moving it into a 6% loan? Yes, you have access to the money. Maybe you get to buy something more, but you've now doubled your payment on that piece that's left on your loan balance. And you've gotten toward that imputed equity, let's say the equity that you got in there. But at the end of the day, there's also a cost. So there's a lot of people that are sitting in this situation right now.